we are kicking off the second in our series about the struggle of marketers proving ROI. And in this session, I am really excited to introduce two investor board members, folks. I'm going to let you introduce yourselves and talk a little bit about what it is you do and kind of what falls into your portfolio. Allison, do you want to start?
Sure. Thank you all for joining. It is great to see you. My name is Allison Plasko. I'm a principal at Springtime Ventures. I am in Atlanta, but most of my team is actually in the Colorado area. So we are seed stage investors. We concentrate our investments in companies building software-based solutions in health, fintech, and logistics and supply chain. Every now and again, we step outside of that and look at marketplace models, but we generally stick to what we know and focus on those three core industries. An overwhelming amount of our portfolio, or majority of our portfolio, is B2B. We have a few consumer-focused companies, but given the nature of our network and expertise, we tend to focus on companies that are B2B.
Daniel?
Yeah, I echo Allison's comments. Thanks for joining. I'm Daniel Hanks. I'm a general partner here at Lavrock Ventures in the DC area. We invest in seed and Series A companies, both on the B2B software side and a little bit more on the deep tech side, which is kind of less relevant, obviously, to this discussion here. Generally, our entry point into companies is between 1 and 5 or 6 million in ARR. So a lot of the things we're going to be talking about is top of mind, obviously, for my companies, our boards, and the like. And so the challenges that everyone is facing is, they are common, right? So these are top of mind for executives and management teams, and hopefully we can provide some helpful guidance and insights.
So, question to both of you. Let's get the obvious out of the way. So when it comes to B2B tech, have you seen consistent changes over the last couple of years? Or is it just me?
I'll start here. The answer is yes. That's obviously not a rocket science comment. It's gotten harder for everybody. The sales cycles have gotten longer. Budgets of the buyers and decision makers are being slashed. And every constituency is being asked to prove it, right? Prove your ROI, prove your value prop, prove your efficacy from a dollars perspective, how you actually help the business. And so the go-go days of chasing growth and riding those rocket ships have gone. And so, but again, we're not seeing that's common across the board. So it's, if you feel like it's happening to you and you alone, that's not the case.
Yeah, I would echo that. It is definitely a different environment than it was, 18 months ago. People are being asked to demonstrate value. More decision makers are needed within the sales process. And so things are just taking a little bit longer to get done. And so we're still seeing that there's interest in tools, especially those that can, that have some demonstration of ROI. But it's just the timeline from when you start the conversation to when you close is just taking a lot longer. I think some of this too is also driven by just like quote unquote SaaS sprawl over the past couple of years. And so people are really starting to scrutinize. CFOs are looking at what they're spending on SaaS and looking for more consolidated tools versus one-off solutions. So again, though, there's still opportunity if you have especially if you have an ROI.
Yeah, I think that one thing to pile on, if it's okay, Kamala, I think the urgency to make decisions has kind of disappeared, right? And I think a lot of buyers are just sitting on their hands going, look, this is interesting to us notionally. There's nothing that's forcing my hand to buy. I don't care about your end of quarter. I don't care about your end of year, right? I'm trying to keep my business straight. And so we'd love to kind of keep you as a lukewarm, prospect, so to speak. but that dynamic is pervasive.
That all makes a lot of sense. So I get asked very often by marketers what kind of core metrics they should be focusing on and surfacing to the board. But I think before we venture in that direction, why don't we talk about what are I think it's always important to understand what are the overall signs you all are looking for when you're considering an investment. What are the sort of signs and metrics you're looking for from an overall business perspective?
I probably have a slightly different perspective from Daniel. So we're really early stage investors. So I'll just set the context here. When we invest, normally we're investing in companies that are doing anywhere from a couple of thousand in MRR up to probably 60K in MRR. There's certainly variations of that, but I would say that's generally our sweet spot. From a team perspective, usually it's a couple of founders, maybe some FTEs, but it's still a really small team. And part of what they're fundraising for is to bring on additional team members. And so we're investing before product market fit. And so a lot of what we're looking for is really early indications that there is a there. So we spend a lot of time, like all seed investors, on team and trying to understand the founder market fit. We spend a lot of time on market analysis. What's the TAM? Is this a category creator? Are there a jillion other companies doing the same thing? What's the competitive landscape look like? And what are the tailwinds that are propelling businesses within that category forward? So I would say that's where we spend the bulk of our time. And then from there, we'll look at revenue. Usually at that point, there's not a lot of historical data in which you can start to pull trends from, but we do want to see, is revenue increasing? What's the sales process been like for the customers that they do have? How do they think about getting in front of, who do they think about their customer archetype? How do they think about getting in front of them? What are the experiments that they want to run with the money that they're raising to get to and validate that product market fit?
Yeah, I think, look, right now, I think more than ever, investors are looking at the bottom of the funnel, right? I mean, what is actually coming out, regardless of the different tools or approaches that you're using, whether it's content, events, I mean, all these things that we'll dive a little deeper into. And so implicitly, that's just saying what's working, right? Those things always include the kind of standard batch of ROI related metrics, right? CAC, LTV, those types of things. But we're also looking for, what is the zeitgeist within the marketing organization, right? How ruthless are they at throwing out of bed the initiatives that aren't working, putting good dollars behind the ones that are working, right? And so a lot of times that is, if you have something, if you have a grasp on exactly, what is the lifetime value of a customer, and then let's look at those customers that fall out of the bottom of the funnel and ended up becoming, new logos for you. Where did those come from, right? Let's do a forensic evaluation of, basically building up to attribution. Obviously, we know that's hard, right? And where those things came from. But it's important to remember that marketing teams they manage a portfolio themselves, right? There's a bunch of different levers that they could pull. And more than ever right now, because marketing is under such a white hot light, you need to basically come with, look, this is the basket of tools we have at our disposal. And right now, these are the initiatives that we've used and why, right? And I can point you to exactly, the rationale behind it, the math behind it, the analysis behind it, as opposed to kind of in the past. And we'll talk about this. In the past, you could kind of arm wave and say, trust me, and it's my gut. And those days are gone.
So when I've spoken with a lot of marketing leaders looking for ways to report to the board, I try to coach them to be really transparent about, you're looking for how have things performed recently? What worked, what didn't, and what are you going to change to improve over time? That's really the storyline we're looking for here. Historically, how have you felt marketers have met that bar?
I'll go first, Allison, if that's okay. There's a continuum, right? There's clearly a continuum. The answer is generally not good, right? Generally not good is because they, marketers are the kings of, historically, if they get asked a quantitative question, they give a qualitative answer, right? As opposed to, look, we have the data, we're making data-driven decisions, as opposed to, again, kind of arm waving and then putting up a whole bunch of vanity metrics on a page in a deck, right? Big numbers are better than smaller numbers. A line that goes up and to the right, regardless of what it is a positive, as opposed to, acknowledging that attribution is hard, but they're actually trying to peel the layers of the onion and solve the problem and answer those questions. You do start to see, whether it's a new generation or the tools that are available or those types of things, they actually come with the reports, they come with the backup. And so when they are challenged, it is not my opinion versus your opinion, right? This is, look, we can argue about what the facts say and kind of the takeaway, but there is this objective reality foundationally that we all have to start with, right? So.
Yeah, I would say pretty consistent to what Daniel had to say. I think it's, it very dependent and definitely a spectrum, but I think where I always see room for improvement is that storytelling piece and how it connects with the broader strategy, how it's driving revenue. And you get different levels of sophistication depending on, both level of experience, their prior experience. So it's definitely a spectrum.
Yeah. And there's a tendency to migrate. If you are, let's call a spade a spade. If you are a $2 million ARR business, you don't have a marketing team of 14 people, right? And so the first 2, 3, 4 men or women in the seats, they got their start at some leg of the stool. They either came from content, they came from brand, they came from comms, they came from events, right? So that is going to be their security blanket, and they're going to go to that first and try to squeeze all the blood out of the stone there. And so what you want to see is somebody who's kind of well aware, has that self-awareness, and understands kind of where the business needs to go, as opposed to, what's going to make me feel good, what's going to make me feel comfortable, those types of things, right? So it's continuing to challenge the conventions of what's historically worked.
So that brings up an interesting question that I have. So I grew up in tech. I saw a lot of organizations, exclusively in B2B, really relying on their sales force to scale. Historically, we've seen buyer behavior change drastically, and a lot more is taking place online. Are you seeing a shift in when people are investing in marketing at all, or do you think that will be coming?
I'll jump in. I think the answer is yes. I think there is a sense of, to the question of what's changed over the last 5 years, and then what's just changed in the last 18 months, right? I mean, the kind of flood of capital in the early stages got the supply and demand curves out of whack. Prices went exorbitantly high. People were trying to grow into those valuations. The only proxy that they had for future success was historical growth, which we all know doesn't necessarily work, right? But there was we're going to try everything. We're going to spend so much money. Now, you have to prove the benefit of every marginal dollar that you're going to use, right? And so when that comes into marketing, rightly or wrongly, there's this sense that if we had to get rid of everything else in the business, the office space, let's not get rid of the product. and let's not get rid of people trying to market and sell the product. And when you pull those two apart, they're going to get rid of marketing before sales, right? Because they're going to invest in product-driven, product-led growth. They're going to invest in tools that let the product start to do the work of the marketers on their own, right? If it's a usage-based model or anything like that, it will grow and expand. And so what seems to be common is you find kind of one or two people in that marketing organization to get it off the ground. And if you want somebody who's probably worn a VP hat or a C-level hat somewhere else, but beyond that, I would expect to see other organizations expand before marketing. So there's a long way of saying it feels like it kind of been pushed down the stack, but I don't know if Allison agrees or disagrees.
I would agree. I think that where we've seen marketing, it's usually not a senior level hire between at least shortly after we invest. I would say it's usually probably at least a year before a real senior marketing person comes in. But what frequently happens for our companies is that they'll bring in someone who's somewhere between junior and mid-career, and they'll be in charge of content. So content production, including social media. And they, I've seen different models around that, but that's where I've seen usually the first hire when it comes to marketing is like, oh shoot, we need a lot more content than what tradition, that usually falls within the CEO's hat because they're leading sales at this stage. We just need more capacity on that side. And we know we kind of have a roadmap of the type of content that we need, but we really just need some workhorses to execute on it. And so that's usually the first hire that we see and that I've seen pretty consistently across the different companies that we work with over the last couple, I would say 3 years or so. And I'm not seeing that pull back much, at least at this point, in this environment. So I think that will probably be a trend that holds. But, I think some of the seed stage stuff has yet to fully work itself out. And so as things become a little tighter earlier stage, you might see that position get rolled back a little bit.
So seeing as, I don't want to say marketers are a sales support function, but we kind of are. And part of that is proving that we can generate awareness and demand. So hearing that isn't necessarily a strong suit right now with the metrics and talk tracks that you're seeing, how would you coach marketers to get a little bit more comfortable with data? Like where should they think about aiming for?
I mean, I think this starts with alignment with your leadership. And so I think sometimes for folks who are new to interacting with boards, there's, I think, sometimes a propensity to feel like you have to come in with all the answers, where I actually think you need to do some of that relationship building before the board meeting. And so having that open communication with your CEO is absolutely critical. And so understanding what are the metrics that they're driving towards helps you understand how you need to tell the story, because that's how the story is getting told to the board. So it helps you fit into that narrative. So I would say that relationship building piece is probably the most critical in fostering a good environment for marketers and preparing them to be confident and comfortable when they go into these meetings.
I think that's a great point. I also think there's an aspect of building on that. There's an aspect of you have to figure out what type of company you are and where you are in the evolution of the business. For a company that was founded a year and a half ago and is basically just on some sort of step slope up to the right, as opposed to businesses that maybe raised a whole bunch of money and are recalibrated or any of these other types of things, right? And let's call a spade a spade. Some companies should not exist. They got funded during a time of cheap capital. That cheap capital was the only thing that made the business model work, right? You think about, Uber rides used to be $5, they're now $20, right? To extrapolate that across a bunch of different varieties, once you get cheap venture money out of the way. And so if you know where you are, if you know kind of where you fit in that paradigm as a business, and to Allison's point, you know what the CEO and the management team care about, what the board cares about, and what you're tracking toward, like what are the definitions of success to get to that next round, that next milestone, what have you, and then calibrating around that. The good thing that data-driven marketers have, if they know how to use it, is they actually have all the facts on the ground in terms of how this business is performing, right? You're going to know before a whole lot of people, what does the market think about what we're offering? Do we have product market fit? Are we thinking about this the right way? Are customers saying what we want them to say when we ask them about the need? Those types of things. And so if you have the opportunity to have your finger on the pulse before a whole lot of other people within the organization, and you should view that as an intangible asset, not only within the four walls of that company, but you should be thinking about that way for the rest of your career, right? And so understanding how to leverage all that data, not only in the one sample size of your existing company, but then going forward, I think those are really important. So, building the relationships, knowing who you are, and then knowing the data that maps to that, I think it's, that 3-step process is important.
Yeah, that's such a good point. I mean, it's a big reason why you don't see at our stage, a VP of sales or a CMO, because the founder really needs to be driving, because the way that you get feedback, the way you know if something is working is through those marketing and sales functions. And so that's why those folks tend to also sometimes get brought in a little bit later, is because they have their ear to the ground and they know what messaging is working. They know what isn't. They know how customers are responding. They're getting that feedback. So marketing and the insights that come from marketing are just super powerful to understanding not just where the business is right now, but where it's going over the next several months. So it's a really powerful function that people should lead into with data.
Yeah, I continue to get surprised that marketers don't realize that they have all that, right? They come into the boardroom and they make a point, and they're kind of missing the forest for the trees, because they are, maybe in their head, they're like, look, I got to get this one given campaign to be successful. I got to get it over whatever benchmark or whatever trend, that we've been historically looking at, as opposed to, oh, by the way, the same batch of data that I continue to pour over all the time can tell us some pretty interesting insights in terms of what's working and what's not working, right? So you can actually find your way into more strategic conversations, right? So that's just a total missed opportunity for a lot of marketers that aren't paying attention to those sort of things.
And I think what's somewhat implicit in the conversation that we've been having, but it's worth calling out, is that pull up and get that bigger picture. And because that is, that's where the power comes from. That's what board members want to know. And so I think having that bigger picture mindset, instead of just, I'm using this campaign and doing this, and really taking a step back and looking at it from a top, 30,000 foot view, can be helpful.
So would it be fair to say, I just want to get even more specific than that, because I think it's really important. Is it fair to say you all have seen or would like people to avoid walking in and talking about their campaign performance and lead generation and not acknowledging they're missing the overall bookings number or some major trend? It seems, I've always felt like that communicates a disconnection that's worrisome. So are you looking for marketers to kind of start with, here are the overall business trends, here's how we're responding to them, as opposed to just focusing on initiatives?
Absolutely. Look, I mean, if you're kind of coming in and you're demonstrating that the feet don't know what the legs are doing and the arms are doing and the whole rest of the organization, it says you're not, ultimately focusing on what matters. It says that you don't have the open lines of communication elsewhere within the organization to talk about the issues that are top of mind elsewhere. I mean, we always know that there's going to be a little bit of friction and tension between sales and marketing. There's going to be tension between sales and product. There's going to be tension between product and marketing. That always exists, right? But if the people that lead those organizations aren't in frequent communication about, how they could get the flywheel to kind of move a little bit more efficiently, it kind of belies like a lack of, kind of synthesis or kind of camaraderie. Those are not the right words, but those kind of open lines of communication and being in the foxhole together, all those types of things, right? So it's important to come in and table set and say, look, we know as an organization we were 85% for the quarter, 102% for the quarter, 42% for the quarter. We had major churn, whatever it is. Let's get all the facts on the ground, and then that's 45 seconds, and then let's kind of dive into what do you think those the components therein are.
And marketing has such a great opportunity to really lead the charge there if there is an issue and say, we're reevaluating our ideal customer profile and we're seeing this sector churn. So we're going to avoid that as an unacceptable customer profile. I'm hearing a ton of opportunity, Allison, particularly where you were talking about discovering product market fit and what that target market looks like. That to me those are such core functions that marketers have. And I really like, Daniel, to your point, your marketers are sitting at the very beginning of the funnel and can have an opportunity to spot market changes before the rest of the business is really aware to it and help guide the rest of the organization. And, do we need to adjust to the market and start communicating higher up in the organization where the buying power is? And do we need to get in CFO communication because they're getting involved in sales more regularly? These are all really interesting points. Is there anything you'd like to add onto that before I go over to AI?
Look, not from my perspective. I just think the key is it's harder for everybody, literally everybody. You have to demonstrate the efficacy of each additional dollar that you're going to spend, and you have to be willing to change course rapidly, because instead of growth at all costs, it is don't run out of money. That is your number one thing. Don't run out of money. And so if you grow into the slope that you need to be for that next round, that's okay. In the scheme of things, it's fine to look back and say, look, growth was a little slower, but we learned, we tweaked, we optimized, and now it's the slope and you can see it work. We can point to you why it's working. We can show you the data. We can show you everything that tools like CaliberMind and others can point to, right? But instead of look, we're trying to grow inefficiently to demonstrate something, and you're going to be sitting on revenue that's not as good, customers that aren't as good, churn that's going to drive increasingly higher, right? And you're going to have, again, a kind of vanity metric led business, right? So you don't want that.
Yeah, I think on the part about the board piece, the last thing I'll say is, I think it's important, like candor is important in these meetings because marketing is sitting at, the very top of the funnel. And so the good thing about a board is that these are folks that have deep expertise. They're usually on several boards or they have a portfolio. So they're seeing trends across different companies. And so leverage them. If you're having, if there's a challenge, like, don't be afraid to talk about what isn't working, because that can be sometimes that canary in the coal mine of potentially other things that really jump, that the whole organization needs to be involved in driving. And so I think really treat the board meeting as an opportunity to both leverage the insight that you have, but also brainstorm and get the wisdom of the folks in the room. So I don't think, don't necessarily feel like you have to sugarcoat it, because there's a lot of value in surfacing what isn't working, both from the company standpoint, but then also, you're in this every day and you're with a group of folks that, again, are developing a lot of pattern recognition, across companies and aren't, they're coming in at the 30,000 foot level. And so can help, potentially think through different ideas.
Oh my, I mean, it's such a great point by Allison. If there's dissonance between the tone of the marketer coming in and how the business is performing, first of all, that's, we're going to go, somebody living in the twilight zone. And the second thing is, bad news travels fast. Good news shows up in the numbers, right? So if things are working, we'll see that they're working. We're here to focus on earning a right to an opinion through the data that we can share with the board, with the management team, collectively as a team to solve the issues that the company is facing, right? So make sure you're all on the same page and don't come in and just kind of, say, look, it's an exciting time here for marketing. We're in our third quarter of not hitting numbers, but wow, we got a really cool event or something like that. Those disconnects happen more often than Allison and I would admit. And those are the ones that we can basically tell you are not going to achieve escape velocity as a business because the disconnect that exists.
This is oddly validating for me because I've always felt like Chicken Little because I'm like, yeah, we hit our number. It looks great. These early indicators, something's coming and I don't know what it is. I think you all are validating that you'd rather hear that than everything's sunshine and roses. So that's great. So what I'm hearing is, just to build on Allison's point a little bit more, is if you have vanity metrics and that's all you have right now, start building towards things like cost efficiency metrics and really start focusing on proving out which things work and don't work, and then weave that into how you're helping the company move in the direction your CEO is trying to get. So better coordination and better talk tracks around what works and what doesn't. So the other major trend in the market, we'd be remiss if we didn't bring it up, is AI. So I believe Q3 so far, we saw 11.6 billion invested in AI startups, whereas 1.8 billion was for SaaS without the AI component. And I see a lot of companies scrambling towards finding a way to incorporate AI to stay relevant. I would love to get your thoughts on how you think AI should be playing into both product strategy and productivity overall for organizations. Or if it's just a trend.
I mean, I'll be honest, I think we're still trying to figure some of this out. We know folks are leveraging it for productivity. We know, I mean, part of our interest in AI is some of the automation that it brings from just from a workforce standpoint. When you look at stats around an aging demographic, et cetera, like it's quite dire. And so, for instance, we invest in healthcare, like I said, and like workforce shortages are very real and will only get worse. And so we're very interested in what are the ways that you can meaningfully automate some of the administrative tasks for physicians, for example. There's some companies that we've talked to that are doing that. We've looked at like actually personnel related workforce issues and ways that AI might be able to alleviate that. But I think for us, there's, we're always cautious of what feels like very hypey investment cycles. And so we're not all in on that. But we also know that it does create an opportunity where we know that, in, for instance, workforce, there's existing challenges that automation might, help address and help us just do less with more. But, I think we're cautiously optimistic about the role AI will play in general.
Yeah, look, I'd echo that in the same way that you felt obligated to talk about it. I think a lot of companies feel like they're obligated to put it somewhere in their product stack or what they do for marketing. When in reality, it could just be a stamp that people are putting on the packaging of their new product. Right. And so I think the key here is, like Allison said, do a rigorous exploration of the tools that you use, right? And the cost benefit analysis of AI content generation, everything. I think as we would all agree, you can tell when you see something that's been written by ChatGPT as opposed to, a living, breathing human being who's done marketing content for 25 years. But that's not to say that they're not going to be doing that fairly quickly, right? And so I think it's certainly more impactful in the product realm right now than it is in the marketing realm and the go-to-market more broadly. So otherwise, it kind of gets the shiny object treatment from us, and let's look at the kind of underpinnings of the business.
Yeah, unfortunately, I've hidden my autopilot, so people can't see my dependence on AI already, but it's there. I don't know. My view has always been like, if you're not figuring out how to incorporate it, make your day more productive, you're kind of behind the competition. So it just sounded so reasonable. What you both said about AI, and it just seems like a huge tidal wave that may turn into something super meaningful, or it may take a little longer.
Look, I mean, there was a lot of ink spilled around Web3 and crypto, a lot of dollars put into that.
Yep.
What a fortuitous development for a lot of those folks to find something new to chase, right? So there's going to be a lot of ink spilled around that. There's clearly going to be some real businesses built. Clearly going to be a lot of money and time wasted, as with anything. So just have your head on a swivel.
Makes sense. So if there's a core message you could give to marketers out there who are looking to get in the C-suite and haven't had any experience with board reporting, what would that be?
I think the first is, I think about, companies that I've had the pleasure to work with over the last few decades. I think the key is if you have access to facts on the ground, if you have access to data that signals something going on with the underlying business, whether it's in your marketing world in a specific campaign or broadly in the funnel, or how customers are responding to something, your opportunity to surface that as the person who has access to that before anybody else is a real benefit, right? So, knocking on the proverbial manager's door and saying, "Hey, look, I found something interesting here. I want to show you this." Those things start to snowball, right? And you become kind of a trusted resource who is paying attention to the business, right, and is actually going where the facts tell he or she to go. So, I think that's probably one of the easier ways to find you into increasingly strategic conversations.
Yeah, I mean, it's such a great point. There's not much to add as far as, how do you get that foray? I think once you're there, I think then my advice is, I think treat the board as an ally. They're not, there are tough conversations that are had, but it's, the nature of board meetings is that you're dealing with some things that are just messy, and that you need to talk through that might be uncomfortable. And I think when you treat the board meeting as an opportunity to really take a step back and get that 30,000-foot view, and leverage the wisdom that's there, it can be just immensely helpful for moving the business forward. Because to Daniel's point, like you have the data to understand where the business is going, and it's the most valuable piece of data, or valuable pieces of data that the company has.
Yeah, boards are not your parents, right? These are partners. These are investors in the business that want the company to do well, right? So, disabuse yourself of the notion that you're walking into a room and people are seated a lot higher than you are and you're having to scream to get their attention, right? We're all just regular people who happen to have this job, right? We're not special. So, and everyone else around the board table, we're all trying to solve the same thing. So, come with that perspective and with new facts, and I think there's always an ear.
Love those points. That's fantastic. So, Erica, do we have questions?
Sure, I have a couple of questions for you. Let's see what we've got here. Historically, digital marketing and in-person events received a lot of focus as marketing strategies that scale. Do you see new patterns emerging? Other channels we should be focusing on?
I'm not. Yeah. I am far from a marketing expert, so I'll let other people guide on that. We have seen events come back into focus a little bit, right? And predominantly almost more internally focused, right? The power of a sales kickoff meeting is to get everybody aligned around XYZ strategy or the new product or anything like that. Events still feel like kind of hit or miss, just like everything else. I mean, so the overarching point is I'd almost put the question aside and just make sure that you are continuing to spend money behind what works, whether you're familiar with it, comfortable with it or not. Your own kind of personal predilections are not what needs to be solved for here, right? So.
Yeah, I would echo that. I'm not a marketer either. So you all probably have a much better sense of this. I think what I will say is around, in particular, in-person events, I think there's a lot more intentionality into selecting the types of events that folks go to. So I think coming back to Daniel's point, you have to be really thoughtful about what it is that you're showing up to and doing the work, because yes, it feels great to be back in person, but there's also a sense of, you lose a lot of time when you travel to a conference or whatever other type of event you might be going to. But I also think that there is a lot of value in what I'm starting to see come back are smaller events. So it's, a dinner that's 10 to 12 people. That's very, very curated versus, we're going to go to this very large industry conference and there's 5,000 people there. And, maybe we'll meet with, we'll set up meetings. Half the time the people are going to show up, half the time they aren't, and it's a very intensive effort. So that's the subtle shift that I've seen around in-person events. And then of course, I feel like everyone has a podcast these days, but again, I'm not a marketer, so I have no idea what the ROI is on those. But yeah, I feel like that's the thing that I've seen become more and more common over the last 24 months or so.
Yeah, the podcasts are kind of hard to prove out, as I've discovered. But I will say, I think if people want to try new things, that's not bad. But what I'm hearing is, figure out what you can measure, set some goals, and iterate quickly. So if it's not working, pivot. Don't keep throwing money at it. So I think that's probably the soundest advice I can contribute today. Erica, do we have any other questions?
Sure do. When it comes to attribution, there's a huge issue with adoption and alignment. As a board member, how do you advise businesses to begin to align marketing and sales with finance?
It's weird, but my first reaction is I hope that I don't have to force you guys to align as a board member. Hopefully you guys are having those conversations. Hopefully you're getting together on Mondays or Fridays and talking about the KPIs, and you have the representative from FP&A who's helping you track all these things, right? If not, that's going to become incredibly evident at the first board meeting, right? That there's a little bit of that disconnect. But the point is look, you should have the top down, bottoms up kind of combination OKR KPI frameworks working within organizations. You have the alignment on, look, these are the 4 things that are our North Stars, for sales and marketing or what have you, right? And making sure that finance is arming the go-to-market team with the tools to kind of track that on their own and report back. But that should be table stakes for a well-run organization.
The board deck is not the place to test metrics for the first time. And if you haven't, or no, like the saying I always heard was no one should be surprised in the boardroom. So
Yes.
maybe do an internal review first and see how it goes.
100%.
Do you have any more questions?
Sure. What kind of marketing strengths make an organization more attractive to investors overall? Brand building, messaging, community marketing, specialty niches?
I would say, I don't know if there's one answer here. I think it really depends on the business and the customer. It's, different things work for different groups. And so it's a little bit harder to generalize, I think, what is attractive. It really comes down to what is working for your business is going to be the most attractive for investors.
Agree. Nothing to add there.
Are there any more questions or should we wrap up?
I have one more if you have a little time.
Okay.
Outside of content generation, are you seeing other ways marketing organizations are effectively leveraging generative AI?
Maybe for things like list building and, those types of tools, right? Audience forming, audience cataloging, those types of things. Otherwise, I've not seen anything that's kind of bubbled up to my purview beyond content.
Yeah, I would say specifically for marketing teams, have not seen much beyond content generation.
I love AI so much. So list building, I agree 100%. Content generation tends to work best if you're starting with a transcript where you've interviewed somebody who, don't expect it to write the whole thing from scratch and come up with something new. It's leveraging what's already out there. So think about interviewing some thought leaders and using AI to make your job easier for you, would be my advice, as opposed to just relying on it 100%. Let's see. I think that was it for questions. Allison and Daniel, thank you so much for being here and open and sharing what works, what doesn't work. I really appreciate it.